10-year note yields closed today's session down around 445, down from yesterday's close, but it didn't come without some activity and excitement. Early in the session, we got the PPI data, which ultimately came in lower than expected, helping to put some of those inflation fears by the wayside. But then mid-morning, there were some headlines that President Trump was going to look to fire the Fed chair. That caused some angst in the market. Treasury market can handle a lot of news, but one thing it cannot handle is an uncertain Fed and nor uncertainty at the leadership position at the Fed. And ultimately, yields which tanked moved lower, then rallied higher, and then came back and ultimately closed out the day slightly lower at 445. And one point of notice, this is only the second down day we've seen in the bond market since in the month of July. So obviously it's been a move higher in yields this month. Today, only the second day we've seen a pullback, but ultimately seeing yields close lower after a hectic day down at 445. Now, what does this mean for volatility? Well, check out that CVol index over at cmegroup.com. And while volatility did settle higher today on the aforementioned news, the midday spike that we saw was much higher. So we saw volatility spiking much higher on those headlines. However, as calmer heads prevailed, we did see volatility coming off, and while it did settle slightly higher on the day, well off session highs. Lastly, let's talk about what we have tomorrow. Tomorrow is Thursday, which means we get our in-the-moment look at the job market via the claims numbers. We'll also get retail sales, Philly had some housing data. Will all be rounded out by a number of Fed speakers who will continue to give their 2 cents on the economy and policy.